I know I've not made a video in a very long time and I owe you a lot of explanation. I took a very long break from trading. I think the last time I traded was 2024. That was last year, early last year. I owe you a lot of explanation, but that is not for this video. So I'm making this video because I picked two trades yesterday and one was a win, one was a loss, and I just want to do a quick recap video of that trade. Let's look at the trade and let's see the lessons we can pick from there. All right, so first of all, this is my playbook. I like to keep a record of my trade now. So I decided to use Notion for my own trade journal. Notion is a free tool that you can use to keep a journal of your trades. And so I just customized the table. I put the dates the date of the trade, the entry and the exit date, the instruments. For now, I am trading just crude oil, DAX and Usdjpy, and the trade type, whether long or short. And I have a couple of rules that I check before I enter a trade. So I'm going to go over the rules later in another video, and I impute the risk, how much I'm risking per trade, and the profit or the loss. All right, the minus here is the one that was a loss. All right, and the multiple, the R multiple. All right, the one I won was 1.6 R, right? And then the setup, I attached the setup so that anytime I want to go over the trade, I could easily look at the setup and what made me pick the trade in the first place and what eventually went wrong. Because you would notice some of them have two attachments. So first attachment is the setup, second attachment is what happened after I closed or the point at which I closed. All right, and for this USDJPY that was a loss, that has three attachments. So the first attachment was the setup, the second attachment was the trade going bad. I'm going to open them later and we're going to look at them one after the other. And so my exit, what made me exit? So this one I closed manually. One hit a support or a resistance, and this one I closed it manually in loss. And the mistakes, so the mistakes would help me to look at the things that I did. It's important to pay attention to your mistakes, not so you can regret your actions, but so you can pick lessons and try not to repeat the same mistakes. Right now, if I come back after a month and I look at this, my trade, my playbook, I call it my playbook. I look at this, my playbook, and I see mistakes. I kept saying impatience, 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 like 5 times in a month. I mean, that's a problem. Or enter too early, enter too early, enter too early, then that's another problem. So the mistakes are just a way to keep me in check and balance and see how I am improving over time. The goal is to have none, a lot in a month. Have none, almost every month. All right. So now that I've shown you this, maybe later I will show you a video on how to create this for yourself, or probably share this template with you. But for now, let's go to the trade that I really want to show you. So because of my excitement, right, I will start from the first trade. So these were the 3 trades I've picked after 1 year of taking a break from trading so far. And I'm going to start from the crude oil trade. The first one, I picked this on the 7th of April and closed it the following day. It was a buy trade, and I saw a clear trend. There were multiple support and resistance or trend line touch points, and there was over a week of data, and there was a confluence. So I said flip zone or confluence, but this one was a confluence. I was risking $75. I was supposed to make about $400 or $500, right? Now, if I open this particular trade, you would see clearly I added comments to show what went wrong or what I could have done. So this particular one, I closed it. The price went as high as $350 in profit. It rallied and went as high as I'm going to show you the chart, but let's go over my journal first. So this price went as high as $350 in profit, and all of a sudden there was this sudden plunge back down, and price kept going down, further down, and I opened the chart. I saw the spike. I was like, whoa. I checked how much I could have made if I had saw the spike, and that was $350. I was like, whoa. So when I saw price going further down, I had no choice but to close it. So that was why I closed it manually. I said no mistakes, because all my rules were followed. There was no mistake. I was not impatient. The stop loss was not too tight. Basically, there was no mistake. Right now, let me show you the charts. Let me show you the setup. All right, now this is crude oil, right? So I picked that trade. Let me go on the 4 hours. So I picked that trade around here. I picked that trade around here. My TP was here. My stop loss was around here, right? So this was my analysis. So the price went high this much and came back down. So I closed it eventually around this level for a very, very small profit. And then price eventually came further down, and eventually it's bought. Going back to the analysis, that you would see my entry. You see, this was the confluence, right? This was my target, and the confluence was a confluence of support. There was a support. There was a support there, and there was a trend support as well. So there was a bounce. There were multiple touch points. See, this was a touch point. This was a touch point. This was a touch point, and this was the top point, which was the bounce back up. So I was expecting price to come further up, but price kept going further down. So eventually price did a bounce. Eventually price went back. Price did a bounce up, and then it broke this trend resistance. This was a touch point, this was a touch point, and price broke it eventually. So my expectation is that price will come back to this other block region and then push back up. Right, this is the other block here. You can see this is the other block. That's a demand zone right there. So I'm expecting price to bounce to touch this and shoot back up on crude oil. All right, so that is that on crude oil, and you can see why I said there was no mistake, and I showed you I closed manually, everything went fine. I'm currently looking for another entry to buy crude oil, but when I find one, I will get in. So the following day, I entered a trade on Usdjpy, which was a long trade, and the rules I followed were simple. There was a clear trend. There were multiple support and resistance, or there was multiple support or resistance or trend line touch points. There was over a week of data. There was a confluence, and there was a visible order block, a switch trade. There was a visible order block, and I was risking $126 on this trade, and I made about $200 on the trade with 1.6 hours. So let's look at the setup. But before then, let's look at the comment I added in the trade. Price eventually broke the trend to the upside and price rallied higher, meaning that I closed too early. So that was why I put impatience in the mistake. If I had left the trade running, I might have closed with about $300 in profit. Right. So let's look at the setup. Now, this was a very straightforward setup. Right. This was a very straightforward setup. You could see price, this is the clear trend, market is coming down, right? And then there was a touch point here, touch point here, touch point here. So this was a 3-point touch point, and there was another touch point here, and there was another touch point here, making a 2-point touch point, right? And so there was another block around here that extended to this region. So this is a confluence of support which coincided with an order block. And so I set my pending order here. It was a buy limit order I set there, and price touched it and started going up. And let me open the second chart, and it went up and it came to this trend here. This was a touch point here, another touch point here, and it touched this here. So I closed it here. I closed it because I felt like price might reject at that level. Eventually, price broke that level. Let me show the chart. Eventually, price broke it. So that was the region there. Eventually, price broke it, and it created another touch point here. All right, it created another touch point here, and that touch point happened to be a confluence of a resistance. This is a resistance zone here. This was a touch point here, and that touch point here. Let me see if I can get all right. This was a touch point here. This was another touch point here, right? And this was a touch point here. So when price got here, it bounced off. I did not see that initially. I might have been patient enough for price to get there. Price rejected from that zone and started coming down. So I closed it here and I took my profits and I was fine. $198 profit, about $200 in profit, and we are fine. So my exit strategy was because it hit a trend line resistance. If I had seen the resistance at a higher price, I might have held it longer. So that was why the mistake here was impatience. All right, now moving on to the third trade. That was USDJPY. Now, this particular USDJPY trade was a loss. And I'm not pained about the loss actually. As a matter of fact, it helped me to refine my rules better. And then you would notice from the comments I added here that I entered because of the confluence of support, which is not as strong as an order block. Now, that was a lesson for me. I felt like, okay, confluences should be as strong as other blocks, but eventually when I saw what happened on UJ, I realized that confluences are not as strong as another block. Remember the first UJ trade we picked that was in profit, it had a confluence of support which coincided with an order block, right? And that made the trade a five-star trade, an A+ setup. That UJ was an A+ setup for me. The confluence was what made me make the decision to buy. Eventually, I closed it in loss, right? And then it was while the trade was running in loss that I now realized that there is an order block below. At one point, let me show you the order block, right? Let me go down to 1 hour chart. So I entered the buy around here. I entered the buy around this area, and my stop loss was here. My target was here, right? So that was about 3 hour trade, and then I saw price coming down in my losses, so I had to close it manually around this region in loss, and then I saw this other block here, right? This particular one here is another block. So I decided that, okay, fine, let me just chill. And then I went back to my rules again, and I realized that, okay, this is 1 point, this is a 2 touch points, and then there is really no confluence around here, but there is an order block. And guess what? There is a flip zone. You would see this supply zone here that was broken, right? So that made that place a flip zone. If you don't agree with that flip zone, then you should agree with this area as well, possibly. But regardless, price did not respect this supply zone or this supply zone, so that made it a flip zone. So what is that? Where is the demand zone? Where is that demand zone that makes that supply zone invalid? And that is here. That is right here, which makes it our perfect order block. And there is a news today by 1:30. That is in the next 1 hour. There's a news in the next 1 hour, so I'm going to pay attention to this. My entry is set already, pending on that. That's why you would see it in my journal here already. So I have a clear trend, I have multiple touch points, and I have over a week of data, and I have a visible order block, and I have a flip zone. So this also makes this an A+ setup for me. Right, so we are going to see how that would go. I'm going to make a video on that later, right? And all right, so subscribe to my channel and follow me as I document my trading journey. See you in the next video.